If you are a homeowner and were hoping to have sold your house in the past couple of months, I have some unfortunate news for you. You may have missed the top of the market. What's up guys, it's McKeown back again with another video this week. If you are by chance new to this channel, I'm gonna give you a little bit of a backstory about who I am and what I do. Now I'm a local real estate agent and investor in the Dallas-Fort Worth area of Texas. I've been doing real estate since really 2016, 2017. I've since acquired well over $4 million in my portfolio when it comes to real estate investing, and I've sold over $100 million when it comes to transactional volume. Now what I really wanted to talk about today is where the real estate market is at the beginning of August in 2022 and where it may be heading. Now, if you've been following the real estate market since really the beginning of 2020, across the country, real estate has absolutely taken off. Now, I've been on the fortunate side of things, actually having had properties and deciding to sell one in December, as well as deciding to sell one in May, which I then upgraded to two commercial properties. But I can say August of 2022, we've definitely fallen back to what I would consider a relatively normal buyer's market. Now, no longer is it really a seller's market where you are going to have 30, 40, 50 people, maybe even close to 100, depending on your area, viewing your home. No longer are the prices of your home being sold for $100,000 over asking, which in areas, certainly in my market, especially in the North Texas market, you were seeing homes pretty regularly being sold $100,000 over asking. Now, over the last 60 days, we have seen a significant slowdown. Now, a lot of people can contribute that slowdown to just really the real estate market not being sustainable. I can tell you at the rate of appreciation that homes in my local market were going up, it certainly wasn't something that was going to be sustainable long-term. And then you add in the fact of a potential recession and people really wanting to be more, I guess, conservative with their money. And then you throw in rising mortgage rates. All of these can kind of cause a pretty significant slowdown in a real estate market. Now, the Fed decided at the beginning of 2022, when inflation started to kind of become a reality and inflation definitely needed to be combated in some sense, the Fed decided that they would do multiple interest rate hikes over the course of the next 12 to 24 months. Now, the graph that I'm about to show you guys is going to give you an idea just where the Fed rates have happened and what has happened after the Fed has increased the rates and whether or not it really directly affected mortgage rates. Now, as you can see, March 17th of 2022, the Fed decided to do a 0.25% rate hike. That took a significant increase. Honestly though, rates were already starting to climb from the beginning of the year after we heard as a country that the Fed was going to increase rates. Now, if you fast forward to May 5th, they even went higher above and beyond to a 0.5% interest rate hike. As you can see really though, for the next month or so, it really just made interest rates go down. Then once again, with the volatile market that mortgage rates have been this year, it spiked up again, and with a 3/4 of an interest rate hike in June of 2022, specifically June 17th, that actually caused interest rates to go down. Now fast forward to the last rate hike that the Fed did, which again was at a 0.75% on July 27th, actually sent mortgage rates falling substantially. However, we don't have enough data, and as you can see, the last couple days, rates have started to come back up, but it's going to be interesting moving forward where interest rates may lie. Now, the reason why I wanted to show you guys this graph was because again, Fed rates being increased does not correlate directly with mortgage rates rising. Now, a lot of the Fed rates that actually were planned throughout the course of this year were already baked into mortgage rates, really the first couple months of this year. So really that's why you've seen over the course of the last two Fed rate hikes, the interest rates for mortgages really haven't changed all that much. If you really compare the most recent Fed rate hike compared to the second Fed rate hike back in May, there's not a ton of difference really in the mortgage rates back from May to now the beginning of August. Now, going back to the real estate market itself, obviously as an investor, I hope that rates continue to go down or at least level out and stay where they are. I think they're at a healthy amount right now that services really anyone and everyone. Now, being a little selfish myself, being an investor and someone that likes to buy houses, obviously I want interest rates to be as low as possible, but with low interest rates also causes a significant amount of demand, which then in theory will drive up prices. Now, to jump back to the real estate market, especially in my local market, once again, the Dallas-Fort Worth market, I'm gonna hop over to my computer and give you guys a little bit more of an in-depth look. All right, guys, I'm gonna give you a behind the scenes look at exactly what's happening in my local market and across my MLS in the Dallas-Fort Worth area. So I'm scrolling back all the way 10 years. So 10 years ago in the DFW Metroplex, our average sales price or a median sales price was below $150,000. Now, if I could go back to 2012 and buy basically as many properties in the DFW area, obviously I would. But unfortunately, I moved here in 2017. Now, fast forward to 2017, the average or median sales price had bumped up from under $150,000 to $250,000. Now that's actually when I started acquiring properties in my metro. I've gotten a handful and have since sold a couple, but you can kind of see what has happened over the last couple years, or really the last 5 years in our metroplex, is property values have only gone up. Well, for the first time really outside of just the typical little bit of a turn down that you get in the winter months, property values have gone down. Now, fast forwarding to the peak of the real estate market here in the DFW area was May and June of this year. That was on average about $400,000 for a house in our metroplex. Now, we actually have recent data as of July of this year, and it's officially gone down to $388,000. Now, this is typical in the winter months where you'll see a little bit of a fall off just because the winter months tend to be a lot slower than summer months when people are moving. But to see this dip in the later summer months and obviously just understanding the market and the direction it's headed, we're going to continue to see a decline in home prices in the DFW area. Now, this doesn't mean that we're going to have a complete sell-off of homes in our market. It also doesn't mean that we're going to have an absolutely horrible real estate crash. Everyone knew that this was going to happen, and the market that we were in was just not sustainable long-term. But I can tell you, if you own a home, not just in the DFW Metroplex, just a home in general, or multiple investment properties, I wouldn't be advising you to sell them. If you purchase them within the last 3 to 6 months, I would hold them long-term. Now, the next graph that I'm going to be showing you guys is the percentage based on the sales price in which homes, again, in my local market, the DFW area of Texas, what exactly homes were selling for and what they have been selling for in the past. Now, you can kind of see all the way back to 2012, homes were selling for under 95% of the average sales price. So for instance, if I had a $100,000 house, they were averaging anywhere from $94,000 to $95,000 ultimately when it sold. Now, if you follow this graph, really from 2013 all the way to 2020, you had a typical graph for a normal market. Really in 2020 and beyond is when home prices just absolutely took off here. Now, they didn't just go off here, they went off across the country. And for the first time, we really saw home prices selling on average for above 100%. That means every single house on average was selling for asking price or above. Now, comparing this to the previous graph that I showed you, which again, the previous graph that I showed you was the average sales price for homes in the DFW Metro. This is showing you the percentage of the original sales price in which homes sold for. So this actually shows that the peak was in April, really March, April, and May, and it started to come back down in June. And again, the most recent data that we have here is July. It's now the beginning of August here, so we have all of July's data, and as of the end of July, we are back down right at 100%. Now, what I can tell you is without even having the data for the next 25 or 30 days in August, we're going to continue to really go back down to this 96 to 97, 8% range in terms of what your house is being listed at versus what it actually sells for. Now, this third graph that I'm showing you, again, is local to the DFW area, but a lot of what is happening here in DFW is happening across the country. Now, this is actually what I've been tracking to realize, hey, is the market changing back to a typical market, maybe a little bit of a buyer's market versus what we've seen more frequently being a seller's market. And this is months of inventory. Now, to give you an idea of what months of inventory means, let's use Dallas, just Dallas specifically. Okay, if you had 2 months of inventory and you didn't have a single house in Dallas itself ever hit the market, if you had 2 months of inventory, once those 2 months have been exhausted and you had no new listings in Dallas, that means we would have absolutely no homes left in Dallas to sell. Now, to give you guys a trajectory here on this map, dating back all the way 10 years to 2012, we were sitting at about 2.5 to 3 months of inventory. I would say that's a pretty safe market. Okay, you can track that all the way to 2015 and 2016, which wasn't a huge difference. We were looking at about 1.5, maybe 1.75 months of inventory, which is more of a seller's market. Okay, you have less inventory, more demand. That's going to drive the prices up. okay? So fast forwarding to 2017, which is really when I entered the market, back when you could really get seller's concessions, you could negotiate repairs, we got all the way up to almost 4.5 months of inventory, okay? You, however, see a drastic drop right about here, and I can tell you that month on my computer is April of 2020. Now, I don't have to tell you what happened in April of 2020, but what I can tell you is the months of inventory in April of 2020 was 3.9, all the way almost to the lowest months of inventory ever, which was March of 2021. So only 11 months later, we went from 3.9 months of inventory all the way down to 1.1 months of inventory. So once again, that means for all, not just one county, not just one city, but the entire Metroplex that I cover for my entire real estate team and the market that I'm in, if we didn't have a single house hit the market for a little over a month, we would have absolutely no homes for sale here in the DFW Metro. Now, things did cool off a little bit in the winter months of 2021, which is really standard for the real estate market. And then we plunged to even lower amounts in the early years of 2022. We actually, again, in my local market, hit a very low amount of one single month of inventory, both for the months of January and February of 2022. Now, the reason why I've been following this is because supply and demand is going to be the leading factor in terms of where your market sits. Now, again, as I stated before, January and February of this year, we had only 1 month of inventory, but you can see it start to climb. In April, we had 1.3. In May, we had 1.6. In June, we had 2.1. And the most recent statistic that we just got, 2.5 months of inventory as of the end of July. Now, to give you guys some clarity there as well, I would say between 2 and 4 months of inventory is really a buyer's market. So this month at the end of July, or technically the month of July, was really the first month that we've seen the DFW Metro turn back into a buyer's market. And I can tell you, we're gonna only go up from there. So what does this mean for a buyer? What does this mean if you're someone that has been holding out, maybe, didn't have the cash or just wanted to continue to rent, or maybe you're someone that decided to relocate to some set area? I wouldn't say right now is a terrible time to buy. Yes, interest rates are higher, but you can certainly get a much better deal on a house than you've really been able to get over the last 2 years. Now, also, if rates do continue to climb, you're gonna be in a good position having a better interest rate now than what you could potentially have in the future. And on the flip side, if interest rates, let's say, decide to go down, then you can always refinance and take advantage of a better interest rate. Now, as much as I love the previous graph showing months of inventory, this is also another graph that I like to use for more so sellers. Sellers showing them, hey, it's a great opportunity right now to list, or hey, we probably shouldn't list, or is it a good idea to list now? Maybe it's not, maybe it is. Beginning of 2020, you can start to see an incline in what this graph is for, the amount of showings per listing. Meaning, hey, if I list my house with you, what is the likelihood that we get 2, 5, 20, 50 people coming in my house? You can kind of start to see an incline leading into 2021, a fall off once again in the winter months, and again another peak at the beginning of this year. And now we are really headed back down towards what is only 6.8 showings on average per house. And I can see that continuing to make a decline, especially as we head to the winter months. So really tuning up all of this information for you guys. In terms of the real estate market, I obviously love the idea of selling, and honestly think I sold a little bit early in December. I could have probably held off a couple months and timed the market, even though honestly people say do not time the market. I could have timed the market a little bit better and sold a little bit more into 2022. And I actually missed really the top end peak of selling in really May, June of 2022 with my second property, but I'm not really here at all to complain about those two opportunities. Now, if you're on the buy side and you're looking to purchase a house, this is my personal advice and you can take it as you so will. If you're looking to purchase a house, I would purchase now if you're looking to really hold it long term. I can tell you if, for instance, you're moving to a new duty station and you're only gonna be stationed there for 3 years and then you definitely will be selling it, I would maybe hesitate a little bit. Me personally, I don't purchase anything for the intent to sell it within 2 to 3 years. Everything I purchase, I intend to hold long term. More the case for buy and hold long term is just far more profitable for me. But if that's a situation that you see yourself in, maybe you can have the pros outweigh the cons in that sense temporarily and decide to rent maybe for the short term. Now, on the flip side, if you're looking to buy long term, let's say you live in my Metroplex, the DFW area, and you are renting as we speak, and you've been renting for the last 5 years, and you've been able to acquire enough for a down payment plan and want to purchase your first house. And with that purchase of that first house, you're looking to hold that long term. Maybe it's a house that you and your significant other or maybe family will be utilizing for the next decade. Then yes, definitely purchase a house now. Interest rates have definitely mellowed out a little bit. They aren't the worst that they were. And I can tell you, home prices are going to take a little bit of a dip now, as you obviously have seen from the graphs. But I can tell you, just like everywhere else, real estate prices will continue to rise in the long term. Now, if you are an individual looking to sell, now I can tell you right now, it's still not a bad time to sell. Yes, you kind of missed that overarching peak of the market, but I can tell you, I'm still listing homes and they are certainly still selling. So there are definitely buyers out there still buying. Now, the downside here with the market cooling off is you're not going to have 40 to 50 people viewing your home and significantly raising that price just solely off demand. But if you're in a situation that you need to sell, you're definitely not going to be in a position like 2008 where you're just selling your home for pennies on the dollar. You still can get a significant profit in your home, assuming you've probably owned it for over a year. Now, to end this video with where is the real estate market heading? Now, obviously I wish I had a magic 8 ball where I could just shake it and let you guys know where interest rates as well as prices are going to be in the next 3, 6, 9, 12 plus months. Unfortunately, no one has that. And all of the guesses in terms of where real estate is really headed, no one honestly knows. Now, the real estate market that we've been enduring the last couple of years and the real estate market we're in now is something that no one has ever seen before. So it's tough to say where things will really mellow out to be. But I can tell you also, as I mentioned earlier in the video, the real estate market that we were in was just not sustainable. So this cooling of the market is definitely good long term. Now, my consensus moving forward, I think rates will continue to rise and kind of mellow out as they certainly have over the last couple months since May, after that significant incline in rates. And as far as home prices, yes, they are going to take a dip, and I think they'll continue to take a little bit more of a dip over the courses of this winter season. But I think we're going to start to kick it back up into gear in early spring of 2023. Now, that's just my quick assessment of the real estate market, guys. I'm hoping to do this a little bit more often to give you guys more in-depth and more visibility when it comes to real estate, not just for investment purchases only, but also if you're looking to purchase a primary residence or maybe a secondary home, because obviously being in this profession, I'm going to continue to acquire homes, ones to live in and ones to rent out. Now, one thing that I can tell you guys, if I'm continuing to acquire or purchase rental properties, there's no rhyme or no reason why you shouldn't be too. Thanks again for watching, guys. Make sure to like and subscribe. It really does help, and stay tuned for the next video.